Okay, so in this video, I'm going to talk about taxes and how rich people use taxes and taxation to their advantage, right? When you look at the tax code, the IRS tax code, it is one of the most complex documents on earth. Who knows how many thousands of pages that it has on there, but it has so many things baked into it that rich people just take advantage and use it to their advantage. Now, for most regular people, when we're thinking about taxes, we're just thinking about money that we're paying for something, or money that is being taken out of our salary or wages or things like that. Or maybe if you talk about property taxes, money that you're paying to your local government for owning a property. But for rich people, they use taxes in certain ways that it also makes them more money. So any transaction that they make, they are thinking about tax efficient ways to make those transactions, so that whether they make money or they lose money, they are offsetting they are offsetting those gains and losses through taxes. Now, on a basic level, even when we go back to how you make your regular wages, right? And I use wages in quotations because how it is structured also matters, right? There is the concept of capital gains and ordinary income. What typically happens is rich people, high income, people that have a lot of money, they generally want to structure their earnings. And I'm not using the word income because income, I guess, means something according to the tax code. But they generally structure their earnings to be capital gains. Why? Because it is taxed at a different, the tax rate is lower as opposed to if it is income, right? As opposed to if it is income. So I'll give you an example. If you are someone that is a very high earning person, say you are a basketball player that makes $10 million a year. Now that is a salaried, $10 million is salary. So they're gonna take out taxes and everything the same way that they will take taxes and all of the other stuff from somebody that makes $100,000 a year. But guess what? If for whatever reason you're able to structure those earnings as not salaried, but maybe you were able to defer them or structure them in a way where you don't get them as salary, obviously you cannot do that. But this is a hypothetical. Then you could potentially reduce your tax burden. So instead of going home with maybe $5 or $6 million a year after taxes, you may be going home with, I don't know, $8 million, an additional $2 million. So this is why sometimes you have executives or certain other types of high earning professionals that go around and defer their compensation until later so that they can take advantage of the tax brackets and all of that stuff, right? So yeah, so when you look at executive compensation, oftentimes the salary is usually a low amount. I mean, if you look at so some of the richest CEOs, they would generally say my salary is $1 or $1,000 or something ridiculous like that, because that's not how they're making their money. That is not how they're making their money. That is the definition of optimizing your earnings from a tax perspective to the highest. That is what that is. That's exactly what they do in those types of instances. Now, some other thing that people also do is, rich folks also do from a tax perspective is the use of tax shelters, right? They use tax shelters. And when I'm even talking about tax shelters, I'm not even necessarily talking about like using some sort of foreign jurisdiction, which obviously they do that. They use offshore accounts and all of that stuff. That is a separate issue. But right now I'm even talking about just IRAs on 401ks and things like that. Like, there are all these strategies using backdoor IRAs and certain types of ways that you can invest money in your IRAs where it can balloon to a certain amount. Obviously, there are certain restrictions that you need to follow. But again, these are tax efficient ways that these rich people utilize to make more money for themselves. So now, I was talking about real estate investments earlier. I said, one of the ways that rich people generally make money or use tax advantage, take advantage of the tax code for that. And I'm going to get a little bit more specific about that, right? So for instance, you can use depreciation. When you buy real estate assets, in addition to buying all of the advantages that are in the tax code, there's the depreciation aspects where you can deduct depreciation as some sort of non-cash expense from your taxable income, right? So that is one. Another thing is also something called 1031 exchanges. So what are 1031 exchanges? 1031. So 1031 exchanges allow you to be able to defer capital gains taxes by reinvesting the proceeds from the sale of one property into another property that is similar in nature, right? So this strategy, what it allows you to do, as an example, is to be able to invest continuously and grow capital. You grow your resources, you grow your capital without immediate tax consequences. I mean, can you imagine if you buy an apartment today and you sell that apartment 6 months from now, and you're able to use that money, the gains that you gain from that apartment, you're able to reinvest right away into some other apartment or some other building, and then you keep doing that, building all of that, rather than having to pay taxes every time you cash out, every time there is some sort of event, liquidity event, if you will, you can see the rolling effect of that, where almost like a compounding effect, where you have access to capital, more capital that is not taxable, but you're able to acquire more assets. Another thing that people do is, even with real estate, again, another example out there is the mortgage interest deduction, right? So this is something that, again, high-income individuals use to significantly reduce their tax obligation, especially on multiple properties, right? So this deduction essentially reduces your tax income, making real estate more attractive. Again, by itself, real estate investments are not super attractive, but when you're talking about on aggregate, when you're taking advantage of all of these tax benefits and all of these other things, there's the multiplier effect that makes it look good at the end of the day. But anyway, one of the biggest decisions that you can make in this society is understanding the nuances, the critical nuances of taxes. And if you're able to do that and understand, everything, and how the financial decisions that you make, how taxes impact the financial decisions that you make, then you can always be sure that you are on the right path moving forward. But anyway, like this video.